Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Avino Silver and Gold Mines. Avino Silver and Gold is traded on the TSX under the ticker ASM and on the NYSE under the same ticker ASM. And I'm joined today with David Wolfin, President and CEO of Avino, and Nathan Harte, CFO of Avino. It's great to have you guys on the call, guys, to go through. We're going to dive into the Q2 numbers, but we're also going to do an update on the company. It's been a while. David, I was mentioning to you off mic, it was March when we last had you on the KE report. So we want to find out how things are going on the operations here. And as a reminder for people listening in and watching, the company is a producer. They're operating at their Avino mine, which has been operating for decades now. Actually, it's been in operations for hundreds of years, but with Avino, it's been decades, and it's humming right along with silver, gold, and copper. And then there's also the ongoing development at La Preciosa. This was the big acquisition you did a couple of years ago. You got the permits to kick off the year. One of the first companies to get a permit to kick off 2025. So that's exciting. And I think that's been a tailwind for the company's valuation. But so we want to definitely squeeze in an update on how La Preciosa is going. But just from a high level, David, throw it over to you first. Let's talk Q2. It's in many ways a great quarter. You had big revenues, higher than expected mill throughput, a lot of good things going on. Give us a high level overview of how Q2 went for the company.
Sure. Thanks for having me, Nathan. We're happy to be here. Strong financial performance, as you can see here on the slide. Working capital has grown 30% to $40 million US. Our balance sheet is unlevered. There's 37 million in cash and no debt other than equipment debt. So we're quite proud of our costs, which Nate will talk about. We're a low-cost producer relative to our peers and making money, and we've got a great growth story, and we're really happy with the way things are going. We've been improving the mill over the last couple of years. We've been automating it, and putting in new equipment, and building in redundancies, and we're seeing the benefits of that now.
Well, just a quick follow up on that, David. As far as the efficiency, you actually milled more than you're expecting, and you've done all these efficiency projects. Maybe just put a little color around the hard work the operations team's been doing on the ground there.
Oh, absolutely. We've got a team there, and our office here. We all contribute down there. And since we built the fourth circuit, which is completely automated, we our team down there was really excited and want us to do the rest with the rest of the build, because some of the equipment go back decades. So we've been doing that, and we're seeing the benefits of that. And the people there really like what we've done. We've automated, so there's giant TV screens with every just pump and all these things that they can see in real time. And we put in more sensors in the circuit, so we get real time information, and so we can make adjustments on the fly, which is improving our recovery rates and the mill throughput.
Yeah, the beauty of technology and big data and modern mining, and if the old timers can only imagine how advanced things have gotten, but it helps on the efficiency. So you've got a slide up here talking about the production results. As people can see, you got silver, gold, and copper. Give us the rundown here, David.
Yeah, you can see silver equivalent was up 5% slightly. Silver production was down 3%, but gold was up 17%. Copper was up 12%. Really depends on where we're mining in the sequence, but it's pretty consistent. And Nathan will talk about our cost per ton, but we're quite proud of how we've been disciplined in controlling costs, and it's reflected in our financials, and the market's rewarding us for that.
Well, I know it's a forward-looking statement, but just before we move on, you can see you had record throughput in the mill in Q2. How is Q3 going so far, just midway through it?
Pretty consistent. Avino is a consistent mine. It's a thick ore body. Yeah, I mean, it's going to be pretty consistent to this.
Good. Well, we're looking forward to seeing yet another great quarter in Q3. Maybe any other things you want to say as far as some of the development work going on at La Preciosa? We've been talking about Avino, but it looks like you've done some good milestones here underground.
Very exciting time. So it's a short jaunt from surface to hitting the mineralized zones. We hit the first mineralized zone this week called Abundancia. And in the next few weeks, we'll hit Gloria. And so then what we're going to do is start mining on those areas, but also we're ramping down to lower levels and to prepare for different stages of the mine life. So the beauty of this, what the market loves, is that it's not an expensive task to bring this mine online. We're not spending a lot of money, and we're keeping a disciplined approach on our share structure, and we're quite excited about the potential, the value this is going to create for the company because it's higher grade than what we're mining now. So when we start hauling it 19 kilometers away to the processing plant, we don't have to build a new plant. So it's low. It's a low way to expand our operation. And next year, we're expecting 20 to 30% growth just based on the higher grade. And so that's big. It's good. It's going to be very good for the company.
Yeah, grade-driven growth. Now, will you still have a similar throughput and just merge in that higher grade and blend it, or will you work different circuits, or do you expect the throughput to be increasing?
Throughput will be similar to what we have now. Our capacity is 2,500 tons per day. It may be slightly higher based on softer material from the vein, but we're just going to change the feed mix. So Avino, the mine, will feed circuit 3 and 4, which will be combined 2,000 tons per day. And then La Preciosa will go through 1 and 2, which was 500 tons per day. So we control the feed mix because there are 4 independent circuits there. So that's the beauty of our processing plant, because we can keep it separate. This will be the high grade concentrate that we'll produce will be more valuable and we'll get higher returns.
Well, I know that a lot of the big action starts next year, but do you think that some of the production will be making it in by year end here to start with
Yeah,
La Preciosa? Okay.
Q4. In Q4, we're expecting to feed at least one of the smaller circuits, 250 tons per day.
Perfect. Okay, so it's all ramping up by year end here, folks. So
Yeah.
we'll keep our eyes peeled on the development work at La Preciosa. You can see some graphics there of the team getting underground, making it happen. And he also bought a new jumbo drill. Maybe speak to that. It looks like a pretty exciting piece of equipment.
Everything's new there. So we've got a rock bolter, we've got a jumbo and scoop trams, all brand new equipment. The beauty of Avino being around so long, we've got credit facilities with Caterpillar and Sandvik. So because it took about a year to get the permit, we planned in advance and ordered the equipment. So it was on site prior to us starting or getting the permit, and we were starting a few weeks later. So it was planned very well, and you can see in these pictures what we're doing.
I love it when a plan comes together, and it's unusual for the mining industry to plan in advance and have it work out. So nice
Yeah.
to see it going on track when so many other mines that we've watched have been over budget or had delays. And so
We've
exciting
got the
part.
experience there. We've got the experience. We've been operating there a long time. We've got 483 employees. I think we're adding 50 or 60 here.
Yep.
So we've got the experience. So that's the beauty of operating this as a satellite deposit. It's the same people there.
Yeah, it's not your first rodeo, as they say. So exciting times for the companies, and obviously in growth mode as a precious metals producer. So let's shift into the financials here. Nathan, get you into the mix, and it was a really great quarter for the company. We knew it was going to be good because the precious metals prices were good, and even copper prices were good. But walk us through some of the key takeaways for investors.
Yeah, thanks, Chad. So obviously a good quarter all around. Margins were strong, revenues were up, and it's interesting. You saw silver prices, I think, were averaged around $34 for the quarter, and look at where that's today and where it's been subsequent to the quarter, and I think there's still a lot more excitement coming for that too. So yeah, we revenues just shy of 22 million. It's the second highest in our history, I think, after our fourth quarter last year. Profit margin was about 45%. We had over 10 million in earnings from the mine level. And we're actually a company that makes net income even after we have to pay the government and pay everyone else. So that's always a good feeling. We had 2 cents per share, just shy of 3 million bucks earnings after taxes. Obviously, on the cash flow metrics and adjusted side, 6 cents a share, around 8.5 to 9 million on both. And free cash flow. That's obviously the big one. So even after paying out all the equipment and everything, including La Preciosa, we still were generated 4.5 million in free cash flow. So you back out a couple million spent at La Preciosa and the Avino mine itself, covering its own costs and then some, and leaving 6.5 million bucks there left over. And then we'll talk a bit more on cash costs and all-in costs, but yeah, very consistent and well under the current silver price and putting us kind of in that lower quartile of the junior producers and kind of right in the midpoint with a lot of the other mid tiers as well as even some of the seniors now, which is great.
Yeah, and
David spoke to the balance sheet too, so obviously records for the company.
well, and I think it's really notable the year over year comparisons. Like you kind of shot through some of those, but like
Yeah.
if you look at it, your EBIT is up 118%. And then the other one that you had mentioned that really stuck out was the revenues being up 47% year over year. So maybe to speak to, if you look back to 2024 to 2025, what a transformative year it's been for the company.
Yeah, it's been fantastic. Obviously, not just the increase in revenues, and profits, but the margin expansion too. Revenues, it's not like we were selling that much more ounces or anything like that. It's really, you got two things working well. We got the mill operating at a great level, the mine operating you know, at a fantastic, run rate as well too, with costs remaining in check. And then you got that combined with metal prices and kind of the future of the company, and we're all really set up for good future quarters as well.
Well, people always want to know about cost, and like you say, you've lowered your cost down. I think cash cost down 7%, and all-in sustaining down 8%. And people love to compare companies and compare, who's doing good. So I think you got some bragging rights here, Nathan. Walk us through it.
Yeah, not too bad. So Q2 cash costs were 1511, and then all in was 2093. So both reductions compared to Q2 of last year, where we were, I think, yeah, we're down 7% and 8% respectively. And the year-to-date numbers as well too. We did have, our Q1 costs were quite low as well too, which definitely helped on the year-to-date side. But one of the things, and I'll get to it in a bit too, is our cost per ton has been quite consistent as well too. So that's one of the things that, cost per ounce sold can sometimes vary a little bit based on the amount of material sold per period. Whereas cost per ton process is very straightforward. That's has no impact period, no changes period over period with inventory and stuff. It's really just true costs.
Well, let's go there next. The cost per ton, because that's where the rubber meets the road. That's when you're actually doing the mining work. You can control that more than the price in the marketplace. So walk us through that.
For sure. Yeah, so right around the low 50s for cash cost per ton. And comparatively compared to Q2 of last year, it's obviously a significant drop, around 24% for cash costs and on an all-in side. And then year to date, again, still though, so at 7 or 8%. So you see smoothed out a bit more similar to kind of the all-in sustaining cost per ounce. So those do match up a little bit more. And we've done some things to make sure that will continue. We have been hedging foreign exchange, not metals, but just foreign exchange. We hedge against, or not against, we hedge with the USD and peso just to make sure that we can maintain our budget rate. And actually, given the strength in the peso compared to the USD so far this year, that's offset any losses there, which has been fantastic. Sometimes you get it right, so we're pretty happy with how the team's executed on that. But yeah, we're even on an all-in cost side, $75 a ton is there's not many underground mines that operate under $100. It's pretty unique for Avino and just shows how well our operations team and the history and the knowledge they have of everything is really bearing fruit for us.
Now, is there any way, I know it'd be a forward-looking statement, but is there any way you can give people a flavor of how the cost will change when La Preciosa comes into the mix in Q4 and maybe even looking ahead to next year? What does that do to the cost profile?
Yeah, I think, probably for this year, not a huge impact. Obviously, there will be some development material as well too from La Preciosa, so it's going to be a little more variable. I think we'll put out some more details on 26, probably beginning of the year, beginning of next year, end of this year. But it should, our internal models are, and everything we've been looking at is we expect it to come down. It's high grade over at La Preciosa, even with the additional trucking costs. It's more than offset with the price, with the good prices we're getting, as well as the good grade. And we still think we're going to get some good surprises to the upside on grade. I think people are going to be pleasantly surprised on that. So, um, yeah, don't want to put any numbers on it, but we're at around 2021 right now, but we're trying to get to the mid to high teens from La Preciosa, next year. And then the goal long term is mid teens and then eventually low teens when we have the third asset that we talked about too, the Oxide Tailings Project.
Yeah, once you bring the tailings in. So yeah, I think
Yep,
that's just good enough just to know that the goal is to get it down into the high teens with the long-term goal getting it down to the mid-teens. So I think that's
for sure.
the future game plan for the company. And so appreciate you sharing that.
Yep.
Obviously, you did a lot for the community. I don't know who wants to take this one, but you're doing a lot there on the ground.
I'll take a couple of these and then I'll pass back to David. Yeah, we've done a lot in the communities. I think, we a 5 hectare community reforestation program. And each hectare is over 1,000 trees being planted. It's fantastic. A lot of great initiatives from our team down in Mexico. And then the big one, I think, is our sustainability report. I know it's a little behind maybe time-wise, but we did publish our first ever, and we're working on the second one, 2024. And it's not to highlight things that we already knew we were doing, but it's really to show investors and stakeholders that all the things we have been doing all along, well, here's a pretty document that shows all the things we have been doing for years and for decades. As David likes to say, if we were doing things the wrong way, we'd been kicked out years ago.
It's a great point, and I know that you guys have a rich history. Even your father, David, was doing the right things back in the day. So when you do it the right way, we didn't need to have something called ESG, but you're able to at least highlight that you've been doing it the right way for decades. So,
Yeah.
and then here's the upcoming activity. So give us a rundown on the key catalysts coming up.
Well, I can go now. So we're drilling. We've got 2 drills turning. Actually 3.
Three, yeah.
So 2 are going on the Avino mine, one along the fault and one down below the bottom levels, the bottom developed area of the mine from surface. So it's never been tested at depth. So we're quite excited about that. We started to do that in 2023. But our cash position didn't allow us to do any drilling last year. And we were carrying out the recommendations from some consulting geologists. We did a fluid inclusion study and some other things. And so now we're back drilling there. So, and over at La Preciosa, we're drilling as well to confirm the grade and our expectations near where we're ramping now. So the results of those will be compiled in a new resource and reserve estimate. And we've never published reserves in the past because we never did a feasibility study. We built the mine with our own money, and it was profitable for decades. But now, under NI 43-101 standards, we qualify to issue reserves independently, internally, so we can publish those now. So that's a big milestone that's coming. What else can I tell you? I mean, we're excited about these kind of things that are happening there. But the main thing is the drilling, results coming from La Preciosa. I'm going there next week, so we'll be putting updates on our website, so people should go there to see pictures and that sort of thing.
Well, David, maybe just one final comment from you, just on the big picture. I mean, we've talked about a lot in here. Obviously, La Preciosa is the driver for the near term, but you also have a third project, the Avino
Yeah.
oxide tailings, that'll come into play in a couple of years. So maybe give us the big picture growth profile here.
Well, we control our own destiny, so that allows us to be disciplined with our capital, and that's what separates us from other companies that grow through M&A. You don't know what's going to happen to their share structure and what it's going to cost to operate. You have certainties. With us, we're showing you stability in our costs, and here's a growth profile. So if you look at this, the dark blue represents Avino, the light blue represents La Preciosa, and the lightest blue in 2028 is oxide tailings. So if you just look at next year, look at the growth we're going to get from La Preciosa. That's from grade alone. So there's no heavy expenditure to get this growth. So people are really excited about that. And we put together this plan prior to the rally. So what we're thinking next year when we have the reserves, we may reimagine this even bigger than what we're showing you here today. But this is what we prepared internally, what we feel comfortable with. So we're de-risking. We control the timing of this. There's no big financings plan that are going to dilute our shareholders. At our company, we're all shareholders. I'm one of the largest shareholders, so that I'm aligned with shareholders, and so come along for the ride. Here's the growth. Here's the trajectory. We're profitable now with lower grades, and with higher grades from La Preciosa. It's going to drive our costs down lower to, like we talked to, we want to target the mid-teens in our ASIC. And so where will metal prices be? We don't know, but all we control are our costs, and we're profitable today with good margins.
I think that's a great place to wrap it up. And yeah, if you're profitable now with good margins, just imagine the higher grade coming into the mix. And I think many people listening will share the sentiment that they expect gold and silver and copper prices to even go higher over time. But even if they went sideways, you guys are sitting pretty for the next couple of years. So definitely a pleasure to have you both on the call. And for those of you listening in or watching, definitely click below in the show notes. It takes you right over to the Avino website, straight to their news section, where you can follow along with some of the upcoming catalysts we just outlined there, some of that drilling going on, some of the development work, and or just watch for the news as it hits the wires. Gentlemen, great to have you on the show as always, and looking forward to our next conversation.
Thank you very
Thanks,
much.
Shad.